In this video, I'm going to show you exactly how we make about $1,300 in 8 days. It is late Thursday afternoon. We have tomorrow, which is Friday, and then next Friday, this trade expires. It's an in-the-money covered call. A lot of people don't understand what the in-the-money covered call is. In this video, I'm going to show you exactly what it is and how we profit from it. So stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, today we're going to talk about the in-the-money covered call. I've been doing many in-the-money covered calls over the past year, and recently I've been using SOXL. This is an absolute money maker. I call it my golden goose, and it lays golden eggs of profit. We're going to talk about that today because the in-the-money covered call using 3X leveraged ETFs allow us to have a little downside protection, but still generate massive profits. And we're going to give away our shares cheaper. Well, that's the downside protection I love because in this market, the markets go up 2 days and then one hella down day. I mean, just yesterday, SOXL was rallying some 6-7% up to 35. It fell as low as 33x today. They move higher to sell them off. They make profits to take profits. That's what they do. This is what the stock market does. It's geared to go higher. This is the only place for which you can make millions. Those days of real estate and mega mergers, businesses, over. It's in the stock market, and that's why the money keeps flowing to the stock market. So what we want to do is use the golden goose that is selling premium, writing covered calls, selling cash secure puts. That is the true golden goose of investing because everyone else out there, they're buying and holding and they're in the hope and pray game. See, they hope and pray that the stock they buy goes higher. And if it doesn't, they're sitting on their hands and they're making nothing until it makes that move higher. When we sell premium on those same shares, we generate anywhere from 3 to 4 to 5% monthly. And we can even make that in about 2 weeks if you're using 3X leveraged ETFs. And what I'm about to show you now is using SOXL, the 3X leveraged ETF to the semiconductors, 10 stocks, diversified, leverage, so we have volatility. So when we write our covered calls and do our puts, we get hella premium. And if you trade the range, and that's what we're going to talk about in this video, if you trade and trust the range, then you're going to be fine. And we get a little downside protection. Trading the range is about the most important thing that I want to share with everyone. You have to understand how to read charts. It's not hard, it's not rocket science, but you have to have some ability to look at a chart and realize if the stock's trading in a range. And if it is, we trade the range. That's why we buy the shares higher and then we pick the strike price lower. That strike price to give somebody our shares, I picked that for a very specific reason. And in this video, I'm going to show you that reason. Now, what you're about to see, all my members get, they see all my trades, and I've already done what seems to be 20 to 30 of them in January alone. We are incredibly killing it. You could see here in 2025, we're already at $20,000 selling premium, writing covered calls, selling cash secure puts. Last year, I made $19,000. Now, we still have about 8 days. We have one more week. And I've got a lot of trades coming off the board. I'll show you those trades here in a minute. We're on course to make $30,000 in the month of January. Now, on the dividend side, because you know I take my cover call profits and we buy dividend-paying stocks. I call it my dividend tree. And what I want to do is plant many trees so all those trees bear a weekly and monthly dividend fruit. Well, last year I was making about $10,000 a month. That's January right there. You can see we're already kicking ass, and we've collected $16,000. And by the end of the month, we're probably going to have over $20,000. So that would be $50,000 for the month of January, kicking off this year incredibly. Because remember last year I made $378,000 for selling premium and collecting dividends. Last year we started January off only making $19,000. So all the members see all of those trades and they see all the dividend stocks I buy. So what I want you to do is click in the description and get your 1 free month offer. Now, we will talk about that here in a minute because I'm about to show you exactly what the members get and the trades they are doing along with me. But before we get there, check this out. This is January over the past couple years. And you can see in 2022, I was working the 9 to 5. And to be honest with you, it was really taxing me. I was going to retire in December of 2022. It was really hard to work the 9 to 5 and trade. January, we start out making $6,000, and that's phenomenal. We're using about $225,000. Fast forward to my first January in retirement. I retired December 2022. My first month in 2023, well, we're traveling. I have retired from the 9 to 5. We're traveling. We're going to the West Indies. We're on cruise ships. We're in Vegas. I'm waiting for my 401k to be released to me so I can trade my 401k. And we have a phenomenal year. I only wanted to make 100 grand if I could. Well, we sit into the captain's chair, and this year I make $170,000 trading the market, blowing away every year. 2024, we have this incredible month, and 19,000 is incredible. We are now on course to have the biggest year ever, and I end up making some $378,000 selling premium. That was 2024. You could see, look at 2025. This is incredible. Can I break 450,000 this year? We're going to try. My goal doesn't have a number. I just want to beat last year's number. So let's go ahead and talk about this in the money covered call that I did today. And we're briefly going to talk about the in the money covered call. I want you to know that this is one of the more complicated things for people to grasp. And I'm going to try to make it as simple as possible. I know that sometimes people just don't grasp the concept of intrinsic value. And intrinsic value for our discussion here today is the difference between where I bought the shares and where I'm giving them away. So in this case, I went ahead and bought the shares at $33.95. So the shares are trading for $33.95, and I give somebody the right, but not the obligation, to take them away from me for $31. Clearly, there is a miss here if you don't understand the concept. I buy them here, and I'm giving them away here. Well, who's paying for this? Who's paying for that, right? Well, that's $2.95 of what they call intrinsic value. Well, if the call buyer wants to take my shares at 31, for whatever reason, they're going to have to pay me that intrinsic value of $2.95. If I buy them here and they want to buy them off me at 31, then they're going to have to pay me the $2.95. That is a part of the options price. Because as you can see, I got paid $3.60. $2.95 is intrinsic value, or the difference between where I bought the shares and where I'm going to give them away. Now, nobody makes money on that because I bought them at $33.95. I'm giving them away at $31, so I don't make any money off of that $2.95. And the call buyer has to pay me the $2.95 to buy my shares at $31. So the intrinsic value portion of this is nil. It's just the difference between where I buy them and where I'm giving them away. Now, it's the time value premium that's left over in the option. So if I'm paid $3.60 for this option, I give somebody the right to buy my shares from me at 31 when I bought them at $33.95. They pay me the $2.95 in intrinsic value. The difference is my profit. That happens to be 65 cents. And 65 cents on 2,000 shares turns out to be some $1,300 in my pocket. This trade is now placed. By the way, $1,300 on the total money invested, which turns out to be about $67,900 because I had to buy the shares at $33.95. I'm giving them away at $31, but there is your total investment. And this is going to be an 8-day trade. So with this only being 8 days, it's a very tight window. And what I'm hoping for is that the stock will trade in its range. We're going to talk about that range trade right now, but I hope you understand the in-the-money covered call. And by the way, this is what the members get. Every member sees every write-up, and this is the write-up for this trade. You can see I'm very clear and concise as to what we're doing. My cost basis is $31 because they paid me that intrinsic value of $2.95, even though I bought the shares at $33.95. This trade, in short, makes me 1.91% in 6 trading days. So 1.9% in 6 trading days blows away anybody trying to make 1.2 to 1.5% in about 5 trading days. That is a great cash-on-cash trade. Well, you can see I'm not worried about it because if the stock were to fall from $33.95 down to $31, as I'm going to show you in the chart, I believe it's still trading in its range, and that's what's the most important thing. Do you understand a stock's trading range, and where is it trading? Where do we buy it, and where do we stick the strike price? I teach this to my members all the time, so if you want to be a member, in the description below is your free 1-month offer. I'm telling you, you're seeing all these trades. See all these trades right here? These are trades that they see. I did so many last year. This is my retirement money, and these are real trades. This is not just me willy-nillying this. And by the way, I don't know if you noticed, but there's a couple kids trades in here because I do trade my kids' accounts. Now we're looking at SOXL. SOXL is the 3X leveraged ETF to the semiconductor. So we're using a leveraged investment. It's leveraged to the semiconductor index, which has about 10 of the biggest and best stocks. So we are diversified. And because it's a leveraged ETF, we get a lot of premium. That's why we can make so much money. Now, the question is, how do we trade this when it's trading at the top of its range? If you've been with me on YouTube or a member, you know that I want to trade a stock in its trading range. And if you give me a trading range, I'll trade it all day long. You can see this is very common right now, so we have to learn how to trade it. That's why I'm showing this video today, because all these stocks are starting to get extended, and even SOXL has traded out of the upper band of the Keltner channel. By the way, Keltner channel just use the default settings. Don't get special. We are selling time, 1 week, 2 week, 30-day trades. We don't need any special Keltner channel specifics. Use the defaults. Well, you can see it's trading outside. It's getting very hot. And I teach all of my members this. We do not trade stocks that are trading outside the Keltner channel top. Why? Because they will come back and absolutely break you. MicroStrategies is about the best example of this. Everybody's trading it, and then at 5:43, they get rocked some 200 points. Anytime a stock trades outside of its Keltner channel, it is coming back and you're going to get broken. Look at this, trading outside its range, broken, and then it continues to fall. You could sit there and say, well, had I been in here, I'd have caught that run. And I'd have said, well, where's your crystal ball? Where's your crystal ball that you're not catching at the top and you're the bag holder? We watch these runs, and if you're a part of them, I tip my hat, make your money. But we do not get involved when these things are at the tippy top, because ultimately you're going to get snapped off. You could clearly see every single time it sells off, because that's what Wall Street does. They run them up to sell them off, to run them up again to sell them off. They're looking for bag holders. Don't be a bag holder. Now, getting back to SOXL, how do we trade it? Well, it's easy. What we want to do is find its range. And you can see that it has this incredible range. I've been saying it's going to trade anywhere between 34 and 26. We know when they threw the baby out with the bathwater, 25 was the bottom. And you can see it does bounce off of that 25 number, giving us great support. Then what we want to do is trade the range. The way I love trading the range is this. Wherever it's trading in the Keltner channel, we're going to go ahead and find the mid-range. Or if it's trading at the mid-range, we want to see the bottom. So in this case, it rallies to the top of the Keltner channel. Well, that happens to be about 35. If I want action in this stock, which I do because I love this trade, we're going to use the Keltner channel mid as our strike price. Now, I have a reason for this. Why? Because from 35 to 31-ish, we're going to go ahead and get that great premium. The stock is moving higher. We're using the 31 strike. And if they take our shares, they take our shares. We make the money, we move on. This is an 8-day trade. If the stock were to pull back, it's going to pull back to that 31 number. And if it pulls back even further, and let's say we're totally wrong, and it pulls back to 26, 27, well, here's the deal with 3X leverage ETFs. The trade will end, you will keep your shares, and now with your new cost basis of 31, remember I bought them at $33.95. They paid me the $2.95 in intrinsic value, so my real true cost basis is 31. Well, now I can have two trades. The first trade made me $1,300. The stock goes against me. Now the stock's pulled back. Now I have to have a second trade ready to go. And that could be writing a 30-day covered call at the 31 strike. Get out at our cost basis. We make two fat premiums that probably paid us 6 to 7% over the course of that time. I call that the double knockout trade. We get the first one and the second one, and we're out of the trade. What I'd love to happen is 1 week, 2 week, and we're out. But with that said, we use that 31 strike because its trading range would say or suggest that it's going to peel back, because look what it does. Wall Street uses these indexes and they play them like a fiddle. They absolutely play them like a fiddle. They run them up to sell them off to run them up. These are profit vehicles for Wall Street. Indexes and sectors and ETFs that trade them, they absolutely love them. One, there's no earnings, there's no news. They don't have to worry about any of that. Maybe they have to worry about an X date, but really, it is a playground. So what they do is they play these ranges. You need to understand the ranges. And as you can see, over the past 3-4 months, every time it moved higher, it moved lower, running them up to sell them off. Then it gets a little tighter, right? So as we run them up to sell them off, we're using our support lines. I want you to find your sandbox. I call it a stock sandbox. You could see right here. And what we do is we try to find the range. We want to get involved when it's at the bottom, and then we want to sell at the top. Now, if we want to get involved at the top, well, then we clearly need to understand that it's at the top and it could peel back. That's where I love using the in-the-money covered call, because the stock is moving higher. The covered call premiums are going to give us more premium than a cash secured put. We get the downside protection, which means if the stock is to be sold off taking profits, chances are, if I've done my charting correctly, it'll pull back to that strike price. In this case, it's going to be the 31 strike, and I'm going to say it's trading in its range. Now, this is the true value of my membership. Here's an email I sent this morning. You know, I trade SOXL to the tune of 8,000 shares, and we have multiple expiration dates so I can fan them out and make money every single week. Well, this morning, somebody asked me, look, we're at the top of our range. How do we play it? So what do? I send them an email telling them, look, here is the range that I believe we trade this range. If it's trading at 35, I don't have any problems buying the stock and then writing the 31 strike. That's an in-the-money covered call. I just explained it. I'm giving them way cheaper, but that doesn't mean I'm losing money. Now, with that said, if the stock were to pull back, I have that downside protection of $2.95. So it can fall back. And if it continues to fall, we're going to have those two trades ready to go. The first one's already done. I'm in the game right now. Second one, we're ready to go. If it falls below 31 and I keep the shares, we immediately write an at the cost basis trade. We make another $1,300 for a week. Hopefully the stock recovers, as you can see in the chart, and I believe it will, because Wall Street uses indexes and sectors to print money. This is what they do. They play those ranges just like we do at the membership. Now look, I do this for my kids, I do this for me, and members do this because they copy all of my trades. If you want to be a part of it, you get a phone app for which you see all my trades in the phone app. And in the phone app, you get all those exclusive videos. Just recently, I've uploaded a couple videos. Simple chart reading using Bitcoin and MicroStrategies and using BitX. Also, I picked 3 ETFs and 1 dividend stock we're going to use in 2025, knocking it down. And oh, spoiler alert, SOXL is on that list. But do you know the other 2? And what about that dividend stock? I talk about specific things to the members that help them up their game, sell premium, writing covered calls and selling cash secure puts, because that's where I'm successful. And of course, we then take those profits and buy dividend paying stocks, knocking it down in 2025. Hey, look, in the description below is your 1 free month. As soon as you sign up, you're going to get access to the phone app, which has all these videos. You're going to see all my trades. You can see them right there. Look at all the check marks. They're all green. Every trade I do, they see. If I make money, lose money, they see it, and they see all my kids' trades, because that's important as well. I am trading my kids' money, and I can't lose. It's one thing for me to have a bad trade, but I can't lose my kids' money. So the members absolutely love that, and they love seeing all those kids' trades. Hey, look, in the description below, get your 1 free month offer. Would love to welcome you aboard. Hey, look, I'm going to leave it right there. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.